listeners, my name is Timothy Hellberg and I'm a professional trader since 12 years back, and today I'm bringing you a market report for week number 19 of 2022 in collaboration with IMGFX, the people's broker. So let's head right into it. Before we do, let me just remind you that this is not a recommendation to buy or sell any asset or anything like that. It's just my run through of the markets, my view on it, and it's here for educational purposes only. If you want to read a full disclaimer, you can pause the screen and take a look at it. You should always do your own analysis and come up with your own ideas. You can just use this as reference and guidance to become more profitable. So, looking at the agenda for today, we'll go through as we always do, we'll go through the economical calendar for next week, looking at what kind of data releases do we have on the docket that we can look for, what kind of trades can we take from that. We'll take a look at market sentiment, talk a little bit about what the market is thinking right now and what potential shifts we could see. And we'll talk about last week's calls, where we had some very jumpy markets. We pretty much had risk on and risk off during the same market. We'll talk about Bitcoin, that is at the very bottom of its range. We'll talk about gold, that is looking heavy and indecisive. We'll talk a little bit about the trinity of trades, which is oil, dollar, and Japanese yen. And we'll talk about pound Aussie, where we have political uncertainty with the elections in Northern Ireland and overall correlations with the themes that we are seeing in the markets right now. And on that topic, we'll end off this market report talking about pairing strength versus weakness and trading the themes that we can see generally in the markets, because I could go on with trade setups for hours in today's market report based on the themes that we're seeing now. It's just a matter of finding the setup that suits your specific needs and pairing that strength against the weakness that we are seeing in the markets. So let's jump right into it and start with the economical calendar. And for this, we are using the Forex Factory economical calendar. And looking at the week, we have a pretty slow start to the week with not much going on during Monday. Tuesday, not much going on. Wednesday, we have a little bit more with the OPEC meetings. We have CPI from the United States. Thursday, pretty slow too. And then on Friday, we have a pretty thin docket too. So we have PPI on Thursday, for the United States. But it's a pretty thin economic calendar for the upcoming week, I think. Looking at what the market will mainly focus on will be US and China inflation, because we've been talking about this for a long time now, that inflation is the main priority of the whole global financial market at this point in time. We have an inflation survey coming out from the RBNZ, which could be interesting, especially if you are looking at trading the New Zealand dollar. If you are looking to trade the UK pound, then the March GDP data and the UK growth will be basically something that is important to check on, because you will want to compare this to the Eurozone growth and see basically which economy is coming out on top, because we'll talk more about this later. But I think it's heading into this week, looking at the two weakest currencies, it will be a tie race between the pound and the euro, and these kind of news can flip that coin in either direction for it. So basically, looking at Monday, we have the Chinese trade balance, which is important, especially with the Chinese economy contracting. Then we have the Centix investor confidence. Now, these are not red marked on Forex Factory, but I'm giving you this as a sort of insider tips on what you would still look for on a professional trade desk, because these, even if this is not what the general market would look for, I'm giving you these kind of cherry picking right now on what you can look for that isn't necessarily the go-to, but these ones will give you a good insight into the general themes that we are looking for in terms of inflation. And we have the SEV, which once again is, this should really be red marked in my opinion, because this is a big one for the Eurozone, with Europe, with Germany being such a big puller in big part of the Eurozone basically. So yeah, then looking on Wednesday, of course the ECB President Lagarde talking is a big one, naturally. So yeah, I would keep an eye out for those mainly. Here's the inflation expectations quarter-on-quarter for the New Zealand dollar, which I told you is important. Also the preliminary GDP quarter-on-quarter for pound. So those are the ones that I was talking about that will be important to take a look at if you are looking to trade anything that we will be talking about today. So that's that. Let's take a look at market sentiment, and we'll take a look at the VIX. So mentioned before, the VIX is starting to move up. We are seeing some increased volatility, but nothing really outside the normal. If you scroll out the chart, we're just in the upper bounds of the lower regions, but nothing extreme like we saw earlier. Generally speaking, last week, if we take a look at US stocks, so the S&P 500, we have seen it decline, as I spoken about in a couple of reports ago, and we saw some pickup in risk with this big daily candle, where it looked as we were having risk on and we were having a shift in sentiment, but that didn't really play out, and we retraced that back down, and we are back down with risk off, creeping back into the markets again. But what this really tells us is that the market is really right now desperate for some positivity. So when you have these really big reactions and then the retracements of it, this is telling us that the market, this kind of big positive bullish candlestick here, tells us that the market overreacted too fast to something. And what that tells you is that the market is really desperate right now to get good news. It wants positivity, it wants to have something to look forward to, it wants something good to trade. So risk off is back in full play right now, but the market is desperate for a reversal. So keep an eye out for that, because any kind of positive news that we see coming back into the market will overreact. So that is very important to keep in mind when heading into this upcoming trading week. If we look at last week's calls, we talked a little bit about euro dollar, and we've had euro dollar on the chart previously with the euro potentially heading down to parity I'm talking about. But last week, with the kind of schizophrenic markets that we had, we see very similar price action here as to the S&P. We had this big daily bullish candlestick, only to reverse it back down. So we really just had a sideways movement last week. So same thing we talked about the Australian dollar, same thing goes there. Big pop, big reversal. So indecisive markets, big sentiment shifts inside the same almost days of trading. So we last week was not easy to trade if you trade on trying to trade sentiment or anything like that. So I would not much to report on that. And it's just like that sometimes. You just you can't always just chase the market and force the trades to you. But let's look at this week. So starting with Bitcoin, as we always do, looking at the Bitcoin chart, as mentioned before, we are coming down to the very bottom of this range. Now naturally this line in the sand will be the next support, but the kind of pullback that we've seen in Bitcoin the last few weeks is the biggest decline on a weekly basis that we've seen in Bitcoin since 2015. So that's pretty insane, and this just comes back to the risk sentiment, the risk mood. it looked as we were going to move back a little bit, but we didn't. And right now Bitcoin is just a big risk proxy. It's really telling you what the leverage in the market is, and as the market is trying to deleverage, then you will also see this deleveraging spilling over into Bitcoin, causing Bitcoin to turn over pretty much. And as I've spoken about before, anytime we start making any substantial bullish moves off this lows with any type of positive risk mood coming into the market, and sure, we can have a strong bullish move in Bitcoin and even a stronger bullish move in the altcoins, but as it looks right now, the risk is really to the downside, and this thing, as I told you before, can really get some legs if we start taking out these support levels. So I would be very careful being long this pair right now. I would be very careful with my stops. You could also see slippage because this thing moves when it does. So my preferred take would be to short it at this point in time, but the trade isn't really there for me yet. But that's definitely where the risk is lying right now. If we look at gold, you know, it's a tricky one. It's looking heavy because we have these big red daily candles, and then we have these tries to get some bullish ground back where it just gets completely eaten back. We've had it 2 times now. So with that said, from a candlestick perspective, it kind of looks like we are putting in a bottom right here, but it's just, you know, gold is a tricky one for me right now. We are nowhere inside any kind of technical levels that I like. From a macro perspective, I still like gold higher based on the inflation expectations, but it's just a tricky one. I don't have any trades in on long gold right now, but I don't have a short setup either, so I'm staying on the sidelines for this for now. Hopefully we'll see some more better direction soon. If we don't, then there is another commodity that is looking much more interesting at this point in time. And that brings us over to what I call the trinity of trades. So basically you have a trinity of oil, the US dollar, and Japanese yen. So what am I talking about? So if we first take a look at the oil chart, looking at WTI. So we've seen this sort of, you know, consolidation move inside here, and I would like to argue that we are starting to push out of this move. Now obviously this 115.70 level a little bit higher than that, so it's not completely there, but yeah, this 115.80 level somewhere around there is of course the big line in the sand for this pair on oil prices. But you have to understand that oil affects so much in the world. Everything from currency prices, the US dollar, to economies, to corporations. The oil price affects so much in the world economy. So I think this is looking like it's about to break out to the upside. Now, will we actually take out this line? I don't know. Let's see. Maybe we do, maybe we don't. But if we do, obviously this thing can get legs to the upside. But this is the chart to keep an eye out for in the upcoming week. If you're going to have one chart open at all times, then it should be this chart. Because if we start seeing oil breaking out to the upside, this will be very interesting, because this could take the US dollar with it. And if it does, if oil starts taking the US dollar with it to the upside, then you have a chart right here called dollar yen. So if we look at dollar yen, we are having a major bull run. So with this kind of price action, now obviously you want to just buy any kind of pullbacks, and some would argue from a technical point of view that you've just had this kind of flag broken out of, that you can once again trade it to the upside. Sorry for the sloppy chart work, but you get the point. So add to that where you peg the the US dollar the US as an economy against Japan as an economy, there isn't much right now in the long term telling you that Japanese yen would consider it, getting any bullish price action. So, and looking at the US dollar index, the dollar is looking strong, like insanely strong. So, with that said, I really would like to find a going on, as I said before many times, going on a lower time frame, finding a momentum trigger for me to enter long in dollar yen and start building a position of several trades entered at different times based on momentum triggers on lower time frames. I wouldn't mind having a couple of long dollar yen trades, especially if oil starts breaking out. Because if oil starts breaking out, I wouldn't be surprised seeing dollar yen going even higher. And then of course you would have the people saying, well, wouldn't you be scared of buying the top? Yes, and we'll talk about other trades that could be interesting from that point of view. But you don't want to try and pick top and bottoms either. Like, who are you to say that this is going to reverse right now just based on your gut feeling that this is where it will reverse when the market is telling you differently? When my first job on a trade desk, the head of the trading there always used to tell us that the trend can continue longer than you can stay liquid, meaning that you shouldn't try to fight the trend trying to find a reversal, because the trend can go on for years and your capital can't. So from that point of view, is this the perfect trade? Absolutely not, but I think it's a good one going on a lower time frame and looking for that momentum trigger if gold starts breaking out. Now, as I mentioned, pound. I think pound and euro will be the big losers going into the next week. So pound Aussie, you have political uncertainty with the elections in Northern Ireland, but you also have the correlations of the Australian dollar being pegged against risk sentiment. So this one really ties into, if we start seeing some positive risk sentiment coming into the markets, then yeah, you could really see this one taking off to the downside. Obviously, it couldn't take out this previous low, so we bounced pretty hard of that. So that's obviously the line in the sand. I will definitely look to short pound Aussie if it breaks this low. Pretty tight stops to the upside, but it's once again tied into risk sentiment. And if we start seeing some positive risk sentiment, I think this is the trade to go for. And lastly, trading strength versus weakness. So I think pound and I think euro will be the big losers heading into this week. So you just want to pair that against where we could see strength. So I just showed you the oil chart. Now, so come with me on this breakdown. So, okay, if oil starts picking up, obviously any kind of currency with correlation to oil price will start getting stronger. So what do you have? Well, you have the Norwegian crown and you have the Canadian dollar. I personally think that the Canadian dollar is a little bit more attractive there because the Norwegian crown isn't as correlated anymore to oil prices as it was before. And from a central bank perspective, I like the Canadian dollar more as a stronger currency. So what pairs do you want to trade? Do you want to trade dollar CAD? No, you don't want to necessarily pick dollar CAD because the dollar is strong also. So I think what you could have on your watch list would be Euro CAD, and we've talked about this sort of correlation before. If we start breaking lower here, the euro could really fall off a cliff once again in against the CAD. I think CAD yen could be very, very interesting. You have a similar daily chart here to the dollar yen chart, so CAD yen, super interesting. Keep that on your watch list. And obviously pound CAD could be interesting also. those are the big ones, in my opinion, heading into the next week. I mean, look at this pound chart against the CAD. So you want to keep riding these trends. Will they continue? Well, we'll have to see. If oil can manage to break out, then yes, we can see those trends continue. So and keep in mind that it's something that the retail market likes to do, is that it likes to try and pick tops and bottoms, meaning that a lot of leveraged positions, because the retail market uses more leverage than the institutional market and the professional market does. So a lot of leveraged positions will be squeezed if these trends continue, and you will see accelerated moves. That's why very often you see these big last pops in a trend before we reverse, because people tried to pick the reversal too early. So that's the name of the game for me for the upcoming week. Look for oil breaking out. If it does, then you have a bunch of trades that you can trade. If you have risk sentiment picking up, then you have a bunch of trades that you can pick up. And I think those are the two main catalysts to go for, especially as we have less scheduled data releases. If you liked this video, leave a comment, leave a like. It would be highly appreciated, guys. If you have something that you want to run through in next week's weekly report, I can do that. Just leave it in the comments and we'll take a look at it. Until then, I hope you guys have a green and profitable week. I wish you the best. Stay safe, guys. Bye bye.